Hello everyone, my name is Jerry D'Ambrosio, Manager of Educational Content here with VectorVest, and it's my pleasure to bring to you this week's special presentation. The essence of the green light buyer technique is that it's okay to buy stocks when a green light appears in the price column of the color guard. Green lights, which appear when prices are low, offer better opportunities to make money than those that appear when prices are high. Those are just a few quotes taken from Dr. Bart DiLiddo's essay in the VectorVest Views on March 23rd of 2012. I'm going to take us right there to that essay and elaborate a little further on what Dr. DiLiddo is talking about here. So here we are in the Views on March 23rd, 2012. Title of the essay was Green Light Buyer's Guide to When to Buy. So again, it says the essence of the green light buyer technique is that it's okay to buy stocks when a green light appears in the price column of the color guard. It works because green lights appear only when the market is rising, and buying rising stocks in rising markets is a surefire way to make money. Even so, green lights should not be used with impunity. All green lights are not alike. What do I mean by that? I mean that green lights which appear when prices are low offer better opportunities to make money than those that appear when prices are high. The question does become, well, how do we know when prices are low? How do we know when the market's low? I'm going to move us now into a market timing graph, and we're looking at the last 5 months, and I have the price of the VectorVest composite at the top, the MTI indicator at the bottom. I'm going to move to this area here, the May 12th low, after a pretty significant market downturn. MTI got really low, 0.37, and the bottom, or the low at that point, was on May 12th. Now that wasn't our signal day. We didn't get a green light in the price column of the color guard until about a week later on May 19th. Remember, for a green light to appear in the price column of the color guard, the market has to move higher not only on a day-over-day basis, but a week-over-week basis. So we're about a week off of that May 12th low, and we get a green light in the price column of the color guard. MTI is rising nicely off of that 0.37 low. And here is now a nice opportunity for us to enter back into the market. We never got a green light. Again, significant market downturn here. Even with this little market rally, we never got a green light in the price column of the color guard. So the confusion always is, when do I get back in? The market's moving lower. Should I get in now? It's been falling for 2 months. Should I get in now? That confusion is what holds people back from making the consistent profits in the stock market that they want to make. VectorVest provides systematic, clear market timing signals and trend indicators that help us quiet the noise and clear up the confusion. So May 19th was a really nice opportunity to re-enter back into the market after keeping your powder dry for about a month or two. So you could see the market did move higher there for the next month or so. So when should we consider exiting positions? We're going to enter off of low points, right? When the first green light appears after a significant downturn, that's what Dr. DiLiddo was talking about. Green lights that appear when the market is low offer better opportunities than green lights that appear when the market's high. So we want to take advantage of those first green lights after a significant market pullback. A good signal to use, or trend indicator to use, is the primary wave. When the primary wave changes, that means that the market is lower on a week-over-week basis. Okay, so that is a good opportunity to start peeling back and taking profits and considering selling your positions. Now, what happened the very next day? Well, let me actually put back the green light buyer signal on for a moment, because the green light came on May 19th, and what we always emphasize, if you guys watch the daily color guard reports, we always emphasize that even though you get your bullish market timing signal, you want to make sure that we get follow through the next day, right? Well, you could see the next day, the market actually closed slightly lower than the close of the green light day, but the market opened higher, stayed above positive territory for a little while. It's hard to tell exactly when the market sold off, but we're going to assume there that on May 20th, we did get market follow through at least before or right at about 10 o'clock in the morning. Very, very important when you're entering and exiting the market that you have follow through. The signal that we're going to use to help us manage those positions is the primary wave. And again, look at that. The very next day, the primary wave changed. So on May 20th, the close of May 20th, what I look for the next day is the market to follow through. I look for continued selling pressure. If the market continues to move lower the next day, I will consider exiting my positions. Well, the market did not move lower the next day. In fact, it closed much higher, and also the primary wave changed back to up. We're holding steady with our positions. The following day, we've seen this happen a number of times, right? Recently, primary wave changes to down again. So now I'm really paying attention here. The primary wave has changed down twice in the last 3 days after I entered into positions just a few days before that. Primary wave changes on May 24th. It changes from down. I'm paying very close attention to what happens the next day. If the market continues to move lower the next day, I will exit my long positions. It did not. The primary wave changed back to up. We got the market closing strongly to the upside, and then you can see the market continued to move higher there. A nice trend change off of that first green light that we took on May 19th. So what happens here? Primary wave changes down again. We got some nice profits here, I'm sure, picking up stocks off of that, May 12th low. Again, the signal was the 19th of May. So we get a primary wave down on June 6th. We do not get market follow through the next day. I know the market opened lower, didn't move at all much lower after that, and closed strongly to the upside. Look, worst case scenario, and I wouldn't blame anybody if they would have exited their positions on June 7th. Again, we don't know where the market was at 10 o'clock in the morning. Regardless, you exit on June 7th, you make some nice gains there. Worst case scenario, primary wave turns down on June 9th. And what happens the next day? My goodness. The market gaps down and continues to move lower. In fact, it didn't move any higher than the open on June 10th. Market opened at 55.92. The high was 55.92, winded up closing at 55.02 the following day there on June 10th. Worst case scenario, you exit near the close of June 10th. Best case scenario is the primary wave turned down on June 9th, market gaps down, and at 10 o'clock in the morning, you exit your long positions. Now, I want to show you guys some empirical data here. What we're looking at is our tactical outlook. How do we take advantage of the market each and every day? We need to understand when we enter back into the market, we need to understand about market signal changes and how to manage our portfolio. Haven't talked about stops or even stock selection yet. We're really focusing on what the market's doing and when do I enter back in, when do I consider jumping ship and taking my profits. So I'm going to use the test date or test sample size here from May 19th, which was the first green light in the price column of the color guard, to the primary wave change there on June 9th with considerable follow through the next day. Remember, the 3 primary wave changes prior to that June 9th change, we never got follow through the next day. No reason to exit our long positions. So now, what types of stocks should we be buying? That all depends on you as the investor, as the individual investor. Hopefully by now you should know if you're prudent, if you're conservative, if you're aggressive, if you're speculative. We've broken down each of those investment styles and laid out indicators for each investment style. For example, if you're an aggressive trader, you're looking for performance greater than about 20% a year, you are willing to take on risk, and you want to favor high growth stocks that are rising in price. So the indicators, the VectorVest indicators that you should be focusing on if you're an aggressive trader are RV greater than 1, RS less than 1. You want that long-term upside potential, but you're willing to take on a little bit more risk. If you're a conservative investor, you're not willing to take much risk. You're focused on capital preservation and you want to favor low growth dividend payers. So in this case, if you're conservative, you're not too concerned with the upside potential, so RV less than 1, but you are really concerned and focusing on safety and capital preservation, so you want that RS indicator to be greater than 1. If you're prudent, you want the best of both worlds. You want high reward, low risk. You want your returns to be greater than the sum of interest rates and inflation. So you favor high RV and high RS stocks, stocks with good upside potential over the next 1 to 3 years, but have a good safety score as well. You're not willing to take on too much risk. And finally, if you're speculative, you're looking for big gains, but that also comes with big risk. You disregard value and safety and you buy stocks on news. You're You don't care about the RV and RSs. Again, those are two fundamental indicators, so being below 1 is fine. If you're speculative, folks, what I would suggest is a portion of your overall investment capital. I think it's okay, to put some money into these kind of lottery ticket, biotech stocks. Even marijuana is considered a speculative investment because we don't know what legislation is going to look like down the road. Portion of your overall portfolio to these types of stocks I think is okay. You, of course, don't want to throw everything at speculative stocks. So we're going to go back into the program. Again, the June 10th close is going to be the end of our test bed here. I'm going to go into Unisearch. I have the date up at the top, May 19th. I'm going to scroll down, and we're going to start with our aggressive folder, and we're going to select aggressive stocks. Aggressive stocks look for relative safety less than 1, relative value greater than 1, and we're sorting those stocks by VST descending. So the best stocks are at the top of the list that have a high RV, low RS. And you can see, for the most part, that's what we're looking at here. High RVs, low RSs. Typically, some of these stocks are lower dollar, less than 20 bucks, sometimes less than 10. But look at those RV scores, look at those RS scores. What we really want to look for too here is high relative timing. If you're an aggressive trader, you are looking for some momentum for the most part, right? So you want stocks that are rising in price. You're willing to take on risk, but you want that long-term upside potential. So if I quick test the top 10 stocks from, again, May 19th to June 10th, not bad, almost 10% returns. PBF up 32%, CVI up 30%. You had a couple of big losers here, GO, GL, ZIM, but you had 8 winners, 2 losers. The overall market, folks, went up less than 1%. And you managed to pull away about 10% here, just going from point to point. So nice returns there. You're going to generally see higher returns with aggressive type stocks and aggressive portfolios, but again, that does come with a little risk. The next is conservative. So if I go to our searches conservative folder and just run conservative stocks, take a look at the RV and RS indicators here. Relative safety greater than 1, relative value for the most part less than 1, high safety, low upside potential, capital preservation. You can see the earnings information over on the right-hand side here. Good earnings growth rates as well across the board. So if I quick test those stocks from May 19th to June 10th, only about 1%. We're not looking to knock the cover off the ball with conservative type stocks. We're looking for capital preservation. We do hope to outperform the market, but we want to just keep pace with the market. A lot of these stocks are good dividend payers, so we're generating income that way. We did outperform the market. 1% overall market went up 0.5%. Next is prudent. So if you're looking for the best of both worlds, you want the high relative safety, you want the high relative value. Prudent stocks is a great start. And you can see if I scroll over here to the right, RVs greater than 1, RS is greater than 1, good RT scores as well. So these stocks are definitely in uptrends. This search is also sorted by VST descending. A lot of these stocks too here are undervalued. So if I quick test the top 10, not bad, 6%. So a prudent portfolio should outperform a conservative portfolio, but underperform an aggressive portfolio. And that's kind of what we're seeing here, right? Outperforming the conservative portfolio, underperforming the aggressive basket by just a little bit, but a nice return here, 6%. Again, the overall market only went up 0.5%. And finally, speculative. If I go into our speculative folder and click on speculative stocks, we're looking for RS to be less than 1, RV to be less than 1, a lot of lower dollar stocks in here, but look at the RT scores. Really high. These happen to all have buy ratings as well, but we're not too concerned with fundamentals. It's price action, it's price momentum that we're concerned about. So if I click on quick test top 10, only 1%. We did outperform the market. And here's what you're going to get most of the time with speculative type stocks. Big returns, big winners, but you'll wind up with some big losers as well if you don't manage those positions correctly. This, again, is just a point-to-point test demonstrating when we should think about entering back into the market and when we should consider exiting our long positions. No money management here, folks, just point-to-point, but I wanted to explain and demonstrate kind of the efficacy of the timing system along with the stock selection that goes along with it. The point is, make sure you understand the stocks that you're buying. Make sure that you understand the DNA of the stocks that you're buying. Are they prudent stocks? Are they conservative? Are they aggressive? If you're aggressive and buying conservative type stocks, I don't know if you're going to see the returns that you expect. Going back into the market timing graph, we had another nice run up here. We got a green light in the price column of the color guard. So the market did fall. MTI went well down below 0.6, 0.36 there. We got a green light in the price column of the color guard on June 27th. After a pretty significant market downturn, again, market hit a new low, began to rally, green light in the price column of the color guard. No follow through the next day. Market retreated there for a little bit, got another green light in the price column of the color guard on July 7th. No follow through the next day. Market kind of moved sideways here. I'm okay with staying out of this type of environment. Got another green light in the price column of the color guard on July 1st. No follow through. Another green light in the price column of the color guard. Now the market's really starting to get moving here. MTI is rising. Got a green light on July 27th with significant market follow through the next day. Market had a great run up there for most of the month of August. When should we consider exiting our positions? So we paid very close attention to the green lights here in June and the beginning of July, making sure that we got follow through the next day. We didn't. We kept our powder dry. We recognized that the market really now is getting going. Got a green light on July 27th. Primary wave first turns down there on August 19th. Considerable follow through the next day there on August 22nd. So if I go to Unisearch, go to July 27th. Let's start back up with our search is aggressive. Run that. Low RSs, high RVs, quick test those until our primary wave down date, which was August 19th, but we waited for follow through the next day. So worst case scenario, you exit your positions on the close of the 22nd. Here's aggressive, about 3%, still outperforming the market. 7 winners, not bad. Couple of big winners in here. SRTS up 28%. You did have DVAX go down 20%, but you outperform the market. And look, that's what you're going to get with aggressive type stocks. A little bit more volatile, not as consistent as, let's say, conservative or prudent type stocks. So if I close that, if I go back to Unisearch, let's go now to our conservative folder. If I go to conservative stocks, quick test, not bad here, 5.5% with 8 winners and 2 losers. We outperform the market, very consistent here with a nice hit rate of 80%. If I go to search as prudent, go to our prudent stocks, run it, quick test. Here we made 12%. 6 winners, 4 losers. Biggest loser less than 10%, but CLFD 42%, CPRX 37%. So nice gains there with our prudent stocks. And typically the prudent stocks are going to be your high VST stocks. A lot of these stocks you'll see at the top of the stock viewer. And then finally, speculative. If we run our speculative stocks, quick test the top 10. Here only made about 1.5%. Couple of big winners, couple of big losers, folks. That's what you're going to see consistently with, this type of investment. Again, more of a speculative trade, rather than a long-term investment where fundamental valuation is very important. So where does that leave us today? If I go back to the market timing graph and put back our green light buyer signals here, we haven't gotten a green light signal since August 18th. We're looking at the hard right edge. Here's today, September 16th. We are waiting for a green light in the price column of the color guard before having some confidence about where this market is heading. Now, the primary wave will likely turn up first, but we really want to see the market move higher, not only week over week, but day over day. You could see this little rally here, right? We never got a green light in the price column of the color guard. However, we did get a green light in the buy to sell ratio column. Folks, this is not a green light buyer signal. A green light buyer signal is only if we get a green light in the price column of the color guard. I just wanted to make sure everybody understood that. Green light in the buy to sell ratio column just simply means that the BSR went from below 1 to above 1 on that day, not a green light buyer signal. So folks, I hope you enjoyed today's presentation. Keep an eye on the market timing graph. Watch our daily color guard report every night. We get a green light in the price column of the color guard. We want to make sure that we get market follow through the next day. And I think those searches are a great place to start. Make sure you understand the types of stocks that you're buying. Have a great weekend, everybody. Don't forget, Strategy of the Week Q&A on Monday at 2 p.m. Eastern Time. Take care, folks.